So let's go to pound yen next, aka the beast. Beast from the east. Pound yen, similar setup. Structure shelf is right here. Currently consolidating inside day right before it. We have inside levels of structure here, inside levels of structure here. Same type of elephant candle of consolidation right up here around the 166 even handle. Bigger VS1 level up near 170s. Again, we could bring in our vol. Real quick, sorry. Let's bring on our volume here. I'm going to remember Catarl 3. There we go. Swing high to swing low. See if anything stands out. Calculating. Spikes right in this consolidative level, which is what we would expect. Catarl 3. Same thing, a big void in here. So what I like about this tool is this, right? And this is why I want to implement it to help with analysis, right? And this is going to be helpful for those. We covered this a few weeks ago, I think, in the Q&A. But you see how we have these inside levels of structure here? Give me a yes if we see these, or if you recognize them, yeah. So these are often difficult because if you're a structure-based trader and you're taking targets off of structure, there's always a debate on what structure levels should I choose, and there's going to be 18 million levels of inside structure, and there's going to be outside structure as well. Now we know that inside structure is not as important as outside structure, because inside structure has been previously violated, and once something has been broken, it's not as powerful, right? Kind of like hamstrings. I had a bunch of hamstring injuries, right? Once you pull a hamstring, it never comes back the same, unfortunately. So, but it's very hard to ignore these levels because in our head, we're like, man, like, ooh, what if price stops there, blah, 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 blah. So one thing I like about the volume, and I call it the horizontal volume, but it's called what? Fixed volume, whatever like that, is you can see the more important and least important points in the market. So you can see in both these levels, and I drew a big one on from this swing high to this swing low and a small one from this swing high to this swing low. And you can see that both are pretty much the same, right? We've got high volume levels during consolidation, which we would expect. We've got higher volume levels during consolidation, which we would expect, right? We have a void here in the middle. Now, it's not completely empty, right? Right here is completely empty. But we have a void here in the middle. This void can give you the little clue that says, hey, these levels, these inside levels, aren't as important as this higher level. So I can ignore them and shoot for the higher level for targets. If we had massive volume spikes at these levels, right, what would that tell you? What would that tell you about the market? That would tell you that, hey, maybe we should pay attention to it. Maybe it's inside level, which makes it quote unquote weaker than outside level, but there is some pretty good interest there. So let's take that into account. So again, my goal in trading has always been to, I'm not necessarily looking to make any changes in my trading style aside from the DKC strategy, but my goal is always to become a little bit more efficient with targets and stops. Stops haven't changed too much, so it's more risk management. But more so, my focus has been on targets. How can I kind of get the most out of each trade, especially with me starting from a very conservative point? Because usually I'm pretty conservative where I pick a level where I think the price has no problem going. But if I can get a little bit more, it makes that much of a difference. And I'll tell you what, I learned that from testing other strategies. I learned that from testing strategies that had more mechanical based strategies where I was just doing the difference between like a daily chore is a good example, right? If anyone's tested the daily chore. So we know that the daily chore has a 1-to-1 risk reward, right? And it has about a 50% on average hit rate, right? So 1-to-1 risk reward, 50% average hit rate. That puts you at, fees and commissions aside, that puts you at break even, correct? So what do you start playing with? If you know it's 50%, you know it's 1-to-1, you know you're break even, you know exactly where you need to tweak your edge to be successful. So what do? Well, you start experimenting. Well, what if I move my stop loss a little bit up each trade? Well, now I have a positive risk reward, right? A 1.1 to 1 risk reward plus 50% puts you in profit now. Or what if I move targets instead of a 1 to 1, a 1.5 to 1? Well, now you increase your targets a little bit. Now that same hit rate occurs, right? But you're making more profit. So I'm not necessarily looking to get in more trades. I'm not looking to change my win percentage. I think my entries are pretty, there's not really much I can do with them aside from getting more aggressive. So the things that I can change are my exits. So I focused on that. So yeah, same thing. I think we can look for, again, I love these consolidation areas, these little candles before the elephant candles, as I call them. Good locations for potential profit. I do 240 or 24. There we go. Now, the difference between pound yen and euro yen. Pound yen, we're still holding our VS1 level. Right? We have not gotten out of our VS1 level here. So we're still holding our VS1 level, which I hope we continue to go down for selfish purposes. You can see our pattern formation from yesterday. Again, spiked up. We need to get a little bit lower. But what you would wait for here is same thing. We know our level, VS1. If you don't have VS1, this orange or yellow line, right? Once we get the break, if we get the break, this is our trigger. And once we get that trigger, we know exactly what we're looking at. Pullback extension, pullback extension, pullback extension. And we have room from 162.5 to about 166 even, about 350 pips. And once we're in that zone, then we lock in like snipers. We lock in like snipers and we wait for our opportunity. We don't breathe. We don't move. We wait for opportunity. You should breathe and move. Disclaimer. Please do not try swing trading without breathing or moving. You need to do that, I'm pretty sure. But you guys get the point. So another decent opportunity here on pound yen. Any questions about the beast? I want to stop looking at it. Hope you guys enjoyed the video. And if you ever want to be part of the discussion, feel free to join us in the live trading room. We run both a London and a New York based session every Tuesday, Wednesday, and Thursday. And it is part of your risk-free trial membership at tier1trading.com. So check us out, www.tier1trading.com, featured in Forbes magazine as the leading innovators in trading education. If you're interested in learning how to trade, get started.